Hello, everyone. So exciting to have you. We'll wait a few more seconds for people to drop in, and then we'll get started. Hello, hello. We're going to wait for a few more seconds for people to drop into Zoom, and then we'll get started. All right. Good afternoon, everyone. Thank you for dialing in to the Climate Tech Outlook 2026 webinar. We're so excited to have you. We had 500 signups, so still expecting quite a few people and a lot of questions. So I think definitely enough to talk about. I'm Lisa. I'm one of the founders of Carbon Equity. I lead our strategy on the platform and then our climate approach. With me, we have three incredible panelists that I'll introduce in a minute. First, very quickly, how you can engage with us today. On the chat, you're very welcome to introduce yourself, tell people who you are and what kind of work you do. And then we ask you if you have any questions for us, please ask them in the Q&A function, there we can keep track. And only new questions required, because for all the questions you sent in, we already looked at them, integrated them where we could. So no worries there. In terms of the agenda, we'll do a very quick carbon exchange intro for the people who don't know us yet. Then we'll spend about 30 minutes with the panel talking through climate tech, what happened in 2025, what we'll think can happen in 2026. And then we'll spend a good 20 minutes for all the audience questions, both those that we already got in and whatever is still coming in now. And then we'll wrap up before the top of the hour. Now, climate, carbon equity, what do we do? We believe capital can be a force for good, and we think capital can help solve climate change by investing in climate solutions, and we do that by building private equity fund of funds. What does that look like? Very quickly, we stack investments into our funds that then invest in multiple funds, which then invest in companies, meaning that with one investment, you get exposure to 150 really cool climate solution companies. We currently have about 400 million assets under management. We from 1,500 investors. We are working with 30 investment managers so far, two of which are in the call today. And in total, we've helped fund 275 companies. Very quickly, the funds that we have live now, there's four. The Climate Tech Portfolio Fund has been running longest. We're on our fourth edition. It does VC, growth, private equity across Europe and US. Then we have a Climate Infrastructure Fund, really focused on building out new climate infrastructure, mostly solar, wind, batteries. We have the Access to Climate Tech Fund 2, which is the first retail fund here in the Netherlands, starting at 20K. And finally, we just launched our co-investment program for the people who want to help funds double down on what we think are the winners. All right, getting back to the agenda. Four things we'll do in the panel. First, we'll quickly talk about 2025 highlights. And then we'll talk a little bit about the drivers of climate tech, go a bit into funding, what's been happening, what we think will happen, and then all the panelists prepare some hot takes, some strong opinions on what might happen in 2026. Now, with me here today, we have three incredible guests. I'm so honored to have them. First, there's Shil Khan. He leads the EIP Frontier Fund, which is one of the first funds we invested in, doing really exciting deep tech, mostly in the US and a bit in Europe. And he also hosts one of my favorite podcasts, Panelist, which is really for the climate tech nerds amongst us, diving in deep on all sorts of technologies. Then we have Gerard Reed, really pronounced energy expert, works with a few of the big institutes, World Economic Forum, Energy Transition Forum, also does a lot of advisory for founders and investors. on fundraising and how to scale up. And he has another incredible podcast called Redefining Energy, which I think is really the best European energy transition podcast out there. And finally, we have Will Dufton. He's a partner at Giant Ventures, and he doesn't have a podcast, so he's exception here, but he does host some really exciting conversations in Europe on where and how we can still win on critical technologies like AI and robotics, and what we can do to stay on top of those. So, without further ado, here we are. Will, Gerard, Shill, so glad to have you here. And I thought let's start with a few hot, like quick takes on what happened in 2025. So first of all, let's go to Shill. What was, and according to you, the biggest technological breakthrough in 2025 in climate tech?
So, first of all, thanks for having me and great to be here with such distinguished co-guests. I would say the biggest technological breakthrough for me was not a single technology, but maybe a category of technologies, which is grid enhancing technologies.
Mm.
This is a class of technologies that basically allow you to run more power through existing transmission lines. And the context is that like we need an enormous amount of additional power and transmission, both to deal with all of the increase in load that we're seeing from electrification and from AI data centers, but also just to integrate all the new renewables largely that we're building on the grid. Building new transmission in both the US and Europe has become a really hard problem, and one that's difficult to solve with technology alone. But this class of technologies that are called GETs allow you to get significant, sometimes up to 30% more capacity on an existing line with pretty low cost solutions. We have one company in our portfolio that is called Asset Cool, which deploys robots to deploy a line coating on transmission lines that makes them more reflective. And that basically allows them not to heat up as much. And you can run 15 to 30% more capacity on an existing line. It's super simple when you think about it. And it's basically a no-brainer from an economic perspective. The reason for me it's the 2025 technological breakthrough is just that a class of these technologies, that one included, but a few others as well, really all reached a pretty critical proof point. Like they all deployed on active lines, showed that they could increase capacity. And so basically all of them are exiting the pilot phase and entering the full scale commercial phase. And it's hard to overstate the impact if you could deploy those things widely. It would just get you, the equivalent of tens of thousands of kilometers of additional transmission without actually having to build more transmission.
And save tens of billions of dollars, right, in process.
Yeah, enormously economically efficient.
Yeah. You almost wonder why wasn't it invented before?
Well, we didn't have as much of a need before.
Mm.
We've been living in a world in the West where electricity load growth has largely tracked GDP growth. And so, until just a couple of years ago, we saw 2% per annum in North America and Europe, sort of average annual load growth for like a couple of decades. So we just didn't have the need to expand our transmission capacity nearly as much. It takes a long time to kind of restart that momentum. And so now we're in the phase where clearly we do need to expand it, but it's going to take a long time before we actually do need or before we can build new transmission. So we're just in a sweet spot from a timing perspective. The other thing is robotics, because a lot of these things, they're hard to deploy with manual labor for a variety of reasons, especially on energized lines. So the technology of robotics has coincided with the need in a way that's sort of a perfect storm.
Yeah, super exciting. Gerard, I feel like I have to give you the next question, which is what was the most exciting funding round in 2025? And is it the company in your background or another one?
Yeah, in my background is Kraken. Absolutely right. For those who don't know who Kraken is, this is part of the Octopus Group, which is a UK utility, and this is I suppose, really the best-in-class software platform for managing customers in Europe. Right. Let me talk a little bit about. You asked me really about what went on last year. Um, what's an interesting situation is that there are certain areas where there's massive amounts of money going in. Okay. So just take the case of nuclear fusion, huge amounts of money going into that space, right? And then there's certain areas in the software area where, again, huge amounts of money going in. But I would also say, on the cautionary side, and I'm really putting my European hat on here, what you do see is an awful lot of stress in the climate change area, right? And this is not a political thing. This is really the businesses that have just not been able to scale. And I see a lot of European venture capitalists, if I may say, under pressure. And listen, I'm at eWorld, which is the biggest electrical energy conference or trade show in Europe, and that's what I'm getting out of this as well. It's just stress. And actually, the stress is an interesting thing to talk about. Why is the system stressed? From the European perspective, it's stressed because we've got too much renewables in the system. There's too much renewables on the large scale system, which means, you sort of go from a financing perspective, why would I build more solar when I'm going to get negative prices first? And actually, there's another thing happening, which is that we're building so much renewables behind the meter that's also stressing the system as well. And it's actually back to the whole point that that's why actually we need these grid technologies coming into the system, because of the fact that the system is stressed. Right?
Mm-hmm.
And so, as I said, I wouldn't single out one big capital event last year, but I would say that you also have to look at, that the money that is going in general into infrastructure. And I know we're not just talking about infrastructure, but what we saw last year was record installs of solar across the world, record installs of storage across the world, and it looks like we also had record installs of wind across the world. So, why is this happening? This is happening just because the cost reductions that you're seeing, particularly in solar, are literally off the charts. So when we talk about the best technology change last year, what went on? To me, I go and I say it's the ongoing continuous reduction in prices in solar and storage, and also then the increases in performance. And if you ask me what's the technology of the year, the technology of the year for me is balcony solar. And for those who don't know what balcony solar is plug and play solar. You don't need an electrician. You don't need to put it in your roof. You can plug it in anywhere. And in Europe, this is being regulated at a EU level. And certain countries have put them in. One of them is Germany. And so to give you an idea, what you're doing is when you put balcony solar in, you're generating electricity below the wholesale power price. Okay? This is a revolution because this technology cannot be stopped. And so if you ask me to look at what really has excited me, it's really the beginning of this plug and play solar, and also you'll have plug and play storage attached to it going forward.
Yeah.
And those two technologies will revolutionize our world.
Yeah, I couldn't agree with you more. And the cheaper solar gets, the more attractive it gets to buy, and the more creative we get on how to get it on the grid. Will, I'd love to hear from you. Like, what is the most exciting exit of 2025?
Yeah, and maybe just to give you a quick round as well, just building on Gerald's point about stress in the system. I used to work at a Canadian pension fund. They had an infrastructure group, 20 years old, one of the founding fathers of infrastructure, 30 billion under management. GIP, Blackstones of the world are now raising single funds that have more AUM than the entirety of owners, right? So even the large scale infra funds are now kind of pushing up the risk spectrum, trying to find interesting climate assets to invest in. So for me, like the most interesting round of last year was Spring Lane Capital. It's one of these kind of emerging growth infrastructure funds investing in Danskar, which is a geothermal company. And so for me, that was a kind of really sit up moment where a infrastructure group was taking on way more risk than I've ever seen an infrastructure group take on. And so to me, that kind of is exciting as a venture growth investor, thinking about what does the future look like for companies that I've invested in that are hardware or are going to require like project development, infrastructure at the kind of early stages, perhaps opening up now. And maybe also just kind of on exit and thinking about stress in the system. A European company selling out to an international player, ABB Robotics selling for $5.5 billion to SoftBank. I thought that was a super interesting transaction. There's a lot of companies kind of building in the physical AI space now. This is relevant for climate for some of the reasons Shale pointed out and a bunch of others. But you go to these labs and you see these companies kind of building models to try and make robots do cool stuff. The vast majority of them are using ABB robots. So I'm fascinated to see what SoftBank do with it, given they have that kind of overarching AI lens.
Yeah, exciting stuff. I think we're already touching on a lot of important themes where electricity grids, the renewables are here to stay. The grid is under pressure. I hear a lot of stress. I'd love to hear from you, like going into 2026, do you expect that stress to continue? And very specifically, what do you think will be the biggest headwind and what will be the biggest tailwind for climate tech? Shil, do you want to take it first?
Well, from a headwind perspective, I guess I'll speak as our resident United States citizen here, which is that we underwent and are continuing to undergo a pretty big sea change from a political standpoint in the U.S. with regard to climate change policy, which is becoming lack thereof as of it sounds like this week the U.S. is gonna the EPA in the U.S. is gonna kill the endangerment finding, which is like the underlying principle for the EPA, our Environmental Protection Agency, regulating carbon emissions. That's obviously one of many, many things that this administration has done to try to tamp down on. The concept of climate change is something that needs policy action in the first place. Um, on the other, so that's a headwind in the US, certainly. It's a bigger headwind for some subcategories of climate tech than others. And so I think it's important not to paint climate tech with too broad a brush here because we really are seeing a tale of two cities right now, where if you are in one of the subcategories in the US that is completely reliant on either sort of new government policy or voluntary corporate action, which is kind of downstream of policy in the US, that's challenged. On the other hand, we have, and this will be the tailwind, I guess, for me, we have by far the most dynamic and rapidly evolving energy sector that we have had in decades. And the amount of demand growth, the need to get, the term of art in this industry right now is speed to power. That's basically all that matters. It just so happens that a lot of the technologies that can deliver speed to power are the ones that you've been talking about. The fastest new generation to get online is solar, and the fastest new capacity to get online is batteries. So actually anything that is attached to that trend, whether it be generation, storage, transmission, distribution, load side management, all these things, sees this enormous tailwind that is sort of, it's not driven by the fact that it is decarbonized, but it benefits from that fact because a lot of the biggest customers in that market, Google at probably the forefront, but including the other hyperscalers, do still have these commitments that they intend to keep to the extent that they can. So there's a headwind for companies that are not attached to this macro factor, and there's a tailwind for any company that is.
Which of the two would you say is the stronger driver?
The tailwind is the stronger driver. I mean, it's hard to overstate how big a deal it is. We haven't seen this type of a CapEx cycle. Actually, we've never seen this type of a CapEx cycle. As far as total CapEx going into data centers relative to GDP, we have never seen that. Back to like we looked at data back to the 1800s. There's never been this kind of a CapEx build out. And that CapEx build out happens to be very energy oriented, right? It's not a coincidence that the size of a data center is measured in megawatts. That's an energy term. So the entire world of tech and AI and all the financial infrastructure that underpins it has woken up to energy being basically the core challenge to get this capacity online. And that means if you have a solution that has something to offer, you can just ride onto this wave, and it's an enormously powerful force.
I think it's so fascinating how these two things are happening at the same time, where as we're seeing policy support in certain geographies decrease, there is this other bigger driver emerging. Will, I'd love to hear from you. What's the biggest headwind? What's the biggest tailwind? Or is it
I'm
the
not going to
same?
echo Shale. I'm gonna cheat and echo Shale. I think the headwind and the tailwind is AI, and more specifically, like it's a headwind because I'm really worried that the bubble just keeps getting bubblier, and at any moment there could be a reason for people to pull back on this capex expenditure, whether that's just kind of like people are less excited about new models. There is some sort of kind of private credit crisis. I mean, like the transaction last year that made me sit up was Blue Owl, this kind of listed credit fund, taking a 80% stake in Meta's $27 billion Louisiana data center. So there's a lot of leverage in the system now. But then equally, this is potentially the kind of the most revolutionary technology trend in my living history, potentially ever. And we're still very early to it. And in which case we're going to need a hell of a lot of energy to fuel it.
Nice. Gerard, what would you say? Biggest headwind, biggest tailwind?
I'm not going to actually answer the question directly. And the reason is because I think, and Will has just sort of said it there, is that a lot of the headwinds are also tailwinds. But let me frame it a different way. The way I'd frame it is we're in the biggest industrial revolution in the history of mankind. And every industrial revolution needs an energy source, right? So internal combustion engine it needed oil, right? AI needs electricity, and it needs it really quickly. Okay, so that's the revolution. But the revolution is that it doesn't just impact the way the energy world. It's going to radically impact the way we work and the way our lives are run in the future. It's also going to impact I call it the economic power of countries. It's going to it's already impacted geopolitics across the world. So it's far ranging. That's really what we're in. The positive about it is it's a technological revolution. And what happens with technologies is they get cheaper, right?
Mhm.
If they're otherwise they're not good technologies, they'll not go to market. And we've got great technologies. And again, AI is also an enabler of electrification. And AI also needs electricity. I'm not actually worried about the AI bubble. The reason I'm not is because we're going to electrify everything going forward anyway. So guess what? If it's not used for AI and there's a bubble in it, then that electricity will be used for other things going forward, right? But I would add that the revolution, going back to the technological revolution, it's solar storage, and there's another technology as well, which is semiconductors. Because all of this AI revolution would not be possible without the revolution that we're seeing in and around NVIDIA chips, et cetera, et cetera. Yes, they use massive amounts of power, but if you look at the massive amounts of data that is being processed on a daily basis, if you look at Google and you compare Google what they're processing today to a year and a half ago, it's like 100 times more. I mean, this is like we've never seen anything like it. And so the point I'm making is I look at it quite positive. As these technologies, you can't block them because the low cost of them is such that we are going to electrify our system. And by electrifying our system, this is how you're going to decarbonize quickly. And you're going to do this because electricity is the cheapest way to do it. And we have these technologies that are also cheap and becoming cheaper, right? So I actually look really positively about it. But it's not an easy revolution because in revolutions, people die. And what I mean by that is incumbents die and other businesses won't survive, right? I think the biggest tailwind, I'll say what I say and be a little bit controversial, is China. And the reason I say that China is the tailwind is because China's at the forefront of developing all these technologies, right? It's, again, those three core technologies I talked about, and they're not far behind on AI as well. And they're pushing these products to market in their own market and pushing them abroad at a scale that we've never seen. We have never seen, an energy technology come to market as quickly as solar, right? And I'm very positive about all forms of energy, but like just compare nuclear to solar, good luck to you. The first, SMR comes on in 2029. By 2033, the amount of solar that's put on the system is enough to power the United States and South America put together, right? Just to put it in the scale. That's a technology for me. So again, I just want to make that point is that we are in that technology revolution, and it's very difficult to predict what happens. That's the concern I would have, right? None of us have really know what the future of AI means for the world, right?
Sounds like a very good tipping point to move into 2026. But generally, I hear stronger tailwinds than headwinds, which is an exciting moment. Let's quickly jump a little bit into funding. So I think 2025 was a pivotal year because for the first time after a few years of decreases, climate tech VC funding went back up. It was a modest increase with 8%, but still we hit 40.5 billion. At the same time, we saw the deal count was down, and that's because much more capital is going to growth versus early stage. And we also see quite a bit of concentration of capital in a few sectors, specifically nuclear, batteries, grid tech, EVs. Shil, I'd love to hear from you. How are you reading these trends, and is this good news or bad news?
I think it's reflective of sort of what I was saying before, that the mostly of what is happening is that the energy sector and particularly the parts of the energy sector that are sort of tied to this load growth AI trend are seeing enormous interest. You're seeing generalist investors look really hard at that space. It's been an interesting cycle there where there was a big wave of generalist investors, the sort of Silicon Valley folks getting into climate tech in and around like 2020. A lot of them disappeared, right? Because AI showed up and it was sexier and climate tech was in the sort of down cycle part of the hype curve. And so they disappeared from climate tech, and they would still tell you they don't do climate tech, but they would also tell you that they definitely do energy.
Mm,
And classic example of that in the US, Base Power. It's a company that's run by Zach Dell, who's the son of Michael Dell, founder of Dell Computer. They are basically a combination of a residential electricity retailer and a virtual power plant company. So they deploy big batteries at people's homes, initially just in Texas. They're only in Texas so far today. They've been scaling very quickly. They raised $1 billion venture capital round in 2025, largely from actually almost no energy investors. There's an
mm,
interesting dynamic in this market. If you look at the list, it's basically a who's who in Silicon Valley, and none of the energy specialists were in that cap table. So it tells you something kind of interesting about how the market is playing, which is to say that, again, if you are attached to that trend, the pool of capital is broader for you, valuations are higher, there's a lot that you can benefit from. If you are not attached to that trend, I still think it's actually a pretty tough market to fundraise in.
mhm. Yeah, no, I very much recognize that. Gerard, would love to hear from you. Do you think overall funding for climate tech, will it go up or down in 2026 and why?
Well, I think it's going down. Um, and I'd be a little bit pessimistic about it, and I'd explain why it's going down. The reason it's going down is because one, it's just nobody wants to talk about climate anymore. Okay, and it starts there, right? It starts in the United States, but it's also spread into Europe as well. So I don't mention. I've been in the climate area for 20 years. I don't mention climate because it's divisive. Okay, so I'll call it something else, right? I'll say we need to invest in energy security, or whatever. So I would just say there's definitely a change, and you see this from a political level everywhere. So that's the first thing I'd say. The second thing I would say from a European perspective is that Europe, what's happened is the venture capitalists in Europe have had it really easy for a decade. Because what's happening is there's been more capital coming into the climate areas and prices have been going up and up and up. And now what we're seeing is businesses not performing, and we're seeing down rounds and restructuring of businesses and stuff like this. And if I go and just take the wider situation, which is, I think I sort of said to you, that we definitely do have certain times of the day too much solar, too much renewables, too much electricity in the system. You need to build batteries, you need to change laws to be able to make flexibility come into the market. And that takes a little bit of a while, which means that a lot of the climate tech businesses just can't scale quick enough, right? And so what you're seeing is valuations under pressure. So I think this year is going to be, I think it's going to be a difficult year, I would say, certainly from a
Mm,
European perspective, right? That's what I
mhm.
would say.
Maybe, Sheila, I'd love to hear your US perspective. Do you think up or down?
Up. Like pretty confidently, I think it's going to be up. I think it might triple this year. Like I'm willing to say it's going to be way up, but it's going to be very concentrated in a specific set of categories. I think if you looked at, you could list subcategories. If we're talking about ag tech, if we're talking about carbon removal, things like
They're gone.
that, they're gonna fall through the floor. There will be very little. But again, if you look at the sectors that are benefiting from this AI wave, I think the money that's flowing in is going to surprise everybody.
Will,
And by the way,
where do you
by
put
the way,
yourself in between those two
by the way,
things?
Lisa, just to add to that, because I think it is important, is for me, there's a difference between climate technology and what's going into AI, right? I know there's a lot of businesses that are shifting across, but if you're looking at businesses, for me, climate technology is businesses that are reducing demand for energy, that are cleaning up carbon. I think that's going to be, it's very difficult. So there's no doubt there's certain areas where, and anything related to AI, oh, there's massive money going into that. There's no doubt about that. But there's a whole pile of other areas where there's just going to be very little capital available.
Yeah. So similar content perspectives as Sheila, but
Yeah,
different sum of parts. So I'd love to
yeah,
hear, Will, where would you position yourself?
Well, look, I think to Gerald's point, climate is a horizontal. It's never been a vertical. Like it's been mischaracterized for years now. And ultimately, I think the data this year kind of bakes in a lot of the data center energy investments. And next year, it will bake in other things that are now being rebranded as climate. So do we include space data centers? Like there's at least 4 or 5 companies trying to build in that space. SpaceX is going to get its IPO away. SpaceX, a climate company, because it's moving industry to outer space where emissions don't count. I don't know. I think feel like the data this year is maybe um, if we were kind of talking purely about climate impact and carbon removal or resource efficiency, they're probably including some things in that data that shouldn't probably be in there on that definition.
Yeah. Final question on value funding, because it's an important one. What will happen in the exit market? So the exit market's been tough for a few years, especially IPOs been very low, which means that a lot of companies have been spending a lot of time in private markets. What do you think for 2026? Will we see the IPO market open up? I'll give it to you, Will.
I think that it will be incredible. So I'm a relative newbie on the block. I started my career in 2014 at Lazard. There were no $1 trillion companies. There were barely any $100 billion companies. And now we're investing in battery companies at 5 billion post. You know, we're underwriting to numbers that didn't make sense 10 years ago. So if we see three $1 trillion IPOs this year, it would be completely staggering. And I would love to, it would be amazing to watch. You know, Anthropic, OpenAI, SpaceX. And if they can do that, then I'm sure that will trickle down and a lot of people will IPO. My gut feel is that the market is kind of this broadly shaky. There's this kind of vast inequality that Shale spoke to. You know, the biggest companies are raising all of the money. The biggest funds are attracting all of the LP dollars. To me, it doesn't feel like a kind of stable environment. And I don't think I think we're on a knife edge between those three companies IPOing and everything being fine versus something happening in the private credit markets or something kind of adverse elsewhere that kind of means the market doesn't feel resilient enough to get those companies away, in which case everything stalls. But I think we're on a knife edge.
Yeah. Which side of the knife edge do you think will fall, Shale, or do you see it differently?
I mean, it's hard to know. Like, I don't pretend to know where the macro environment is going to go in the overall markets. If the market holds up as it has so far, if it continues to look like it does today, or even if it heats up a little bit more, we're going to see a wave of climate tech IPOs this year. There are companies, I mean, there are some companies, Fervo has filed an S1 already confidentially, but that was reported. So we know they're trying to go in the next few months. There are a bunch more sitting behind them that are likely to go as well. And even, you know, we've re-entered 2021 and there are a bunch of SPACs that have been announced with companies that are looking to de-SPAC that are in the climate tech world. You could discount those to some extent, but even just in a traditional IPO context, there's a line. And as long as the markets hold up and remain favorable to this trend, I think we'll see a lot of exit activity.
I mean, exciting year to watch. All right, we're halfway through. I think it's time to dive in a little bit deeper into climate technologies and 2026. And I asked you all to prepare a few hot takes, so strong opinions on what will happen with specific technologies in 2026. And maybe, Will, do you want to present your first? We'll do like a 30-second, 1 minute presentation, and then I'll ask Gerard and Shale, thumbs up or thumbs down, whether you agree or not.
My hot take is I cannot believe how much the US government is spending, deploying its balance sheet into equity dollars into critical minerals and mining companies over the last few months. This is in reaction to China owning 90+% of the rare earth supply chain, they own 60+% of mining capacity, but they really importantly own 90+% of the refining capacity. These materials go into some of the most important technologies that we produce as nation states, whether it's semiconductors or fighter jets or whatever. And so this has clearly become a bête noire for the US, and they're pouring a lot of time and capital into it. I think as a result of that, we will see deep sea mining open up properly as an industry this year. It's a taboo topic. It's potentially devastating for the ocean floor. The US have never signed the kind of Law of the Sea agreement. So they are the country that could, if they want to, drive a wedge here. I think they're now testing in Japan. China have started. If the US is really serious about creating a domestically owned supply chain of rare earth metals, the deep sea is a multi-trillion-dollar resource that's still untapped.
Exciting hot take. Gerard, Shale, do you think this will happen? Thumbs up or thumbs down?
I think I'd go along with him.
Okay, then convincing.
Although I wish I could do that, but I'm
no, we're in unison, and I might not even disagree. Gerard, love to hear one of your hot takes.
Well, I think my hot take is that we will definitely say AI data centers in space this year, and I think you're gonna make a point that it's going to become like it could be one a day. at some point, once we go up one a day, that's what I
One a
would say.
day, one data
One a
center
day,
stays per
a
day
day,
in
a day.
2026 or in the future
In
beyond?
26, the end of 26, by the end of
Wow,
26.
I
And
would love to see.
I'd also make a point just to explain why. I mean, what you've got up there is you need no cooling, and guess what? You've got 24 electricity from the sun. Pretty simple. Okay, so your operating costs are very low. The challenge is, can you make these AI data centers the way we make an iPhone? In other words, that there is zero problems going forward. Because obviously, if there's a problem, trying to repair them is not easy.
Can I ask a clarifying question before we vote yes or no
Yes.
on this one? When you say one a day, do you mean one orbital data center satellite per day? Do you mean one individualized, like a whatever 100 megawatt
They,
data
they,
center?
they,
What do
they,
you mean by one a day?
they'll go up. They'll go up. There'll be a satellite. One satellite will go up every day. Every
A
day. Sorry,
satellite, a
not
satellite.
one side. Not one side. Not fine. One spaceship will go up every day with a data center. Okay.
Okay. So this is a Starship launch per day is what you're saying,
Exactly.
basically.
Starship on board. Exactly.
Okay.
With a
Exactly.
data
By the end
center
of the year.
every single day. All
Yeah.
right, Will, Shill, thumbs up, thumbs down. Ooh, okay, Shill, I'm gonna let you answer why.
Oh, I mean, I think Starship will end up doing a launch a day. I think there's a 0% chance that it is this year. I think I mean, for a launch per day for Starship, I mean, optimistically 5 years. They have so far to go before they hit that cadence of launch frequency. Now, I was also going to say orbital data centers, by the way, as like my 2026 trend, because
Oh,
I agree that we are going to see the first. I mean, we've already seen that one of the companies, StarCloud, already deployed a GPU, an NVIDIA GPU into space, and they made,
yeah.
you know, like it's not a real data center, but it's proof of concept. By the end of the year, we might see something that actually can do some compute in the, hundreds of kilowatts type scale. I think it's going to take quite a while before, I mean, you could do math on this, right? Elon is talking about trying to get 100 gigawatts per year of data center capacity into space. If you do the math on how much that is, that does require a full Starship full of full of data center satellites, basically, to be launched at least once a day. I think it's actually a little bit more
Yeah.
than once a day. So I don't think we're anywhere near that, but he's selling a longer term story than that. So I agree on the trend. I just don't think it's going to happen that quickly.
So, Will, one data center in space in 2026, thumbs up, thumbs down.
Yeah, and thumbs down. But I'm not smart enough to understand the cooling challenge. My understanding is it's people way smarter than me who don't believe it can be done because of the vacuum problem in space. You can make a very large radiator fins to cool these things. And then I also just think we're like we're barely tapped out in the corridor in Virginia where we're building these things. So I think it's going to take a few years before we see real meaningful build out in space.
Yeah, since this was going to be mine as well, can I make one additional point on this? I think that as exciting and hypey as it is in the long term, it is the reality is that the predominant driver of the cost of an orbital data center ends up being launch cost, right?
Yeah.
Delivering something into space is the cost. As you said, OpEx could be really low, though I should note, operations and maintenance is an unsolved problem. Stuff breaks inside terrestrial data centers all the time. We have no idea how to fix that in space at this point. So let's kick that can down the road. Launch cost is what matters. In order for orbital data centers to be on the same order of magnitude in terms of total cost as terrestrial data centers are today, we need launch costs to be down in the like $100 per kilogram range, which is where SpaceX intends to be from a cost perspective, I should say, not from a price perspective, by the end of the decade or so. It's where they say they're going to be. So any data centers that we launch into space right now are going to be purely uneconomic. It's like worth noting that. And so the only argument to do it is sort of to your point, Will, we have to hit such a ceiling. We have to be so limited in terms of terrestrial data centers that we're forced, and it relative to demand for compute, that we have to send this stuff into space. And we definitely have a problem in getting new data center capacity online terrestrially on the grid. But my 2026 trend was going to be, I think there will be a trifecta of potential solutions to that are all going to gain lots of attention this year. One is orbital data centers, but that to me is third in line. The other two are edge data centers where you build a network of small nodes that take advantage of excess capacity that already exists on the grid. That's not going to get you 100 gigawatts right away, but it's going to get you, something relatively meaningful. And then off-grid.
Yeah.
You can build off-grid data centers much cheaper than you can build an orbital data center. And we have no shortage of land. So it's not clear to me why we need to go off-world rather than off-grid.
And off-grid, will it be solar, wind, and a little bit of gas backup power? How do you envision that?
Realistically, it's going to be mostly gas backup power with a little bit of batteries initially. And then some of them might add, you can maybe like some folks are going to build solar alongside that as well, and that'll add up to some meaningful amount to the capacity. You become land constrained if you add up that much solar as well. So I think a lot of them, what you're going to end up seeing is a lot of natural gas, and they usually will have some storage.
Yeah.
Just on edge data centers, one trend I'll give you, an extra little bonus trend. I think we're going to see a crazy year for autonomous vehicles. So I don't know if most people, I don't know if you guys have driven in one, but to me, it's the greatest product I've ever experienced. There's numbers coming out that they are like orders of magnitude safer than people driving cars. And also studies that show if everyone drove, if all vehicles in a kind of city of over 1 million people were autonomous, in the US, I think all cities with 1 million people or more, about 20% of the land is dedicated to the car parks. You could save 80% of that land if you were kind of fully autonomous. So maybe we use that land to build data centers.
Oh, we're solving a whole world challenge here. Will, I'd love to hear, do you think the autonomous vehicles will be mostly US or also Europe?
They're going to launch in London this year. I think people are going to be blown away by the experience.
I live in San Francisco, and I can tell you it's remarkable how normalized it is now that like a third of the vehicles on the road in the city are Waymos.
Yeah. Gerard, do you agree?
Oh Jesus, totally. I was in San Francisco before Christmas, and I had so much fun playing with a Waymo. When I say playing with a Waymo, I was walking out in front of it. I was, doing silly things with it, right? And it's absolutely mind-boggling. Really is mind-boggling, to say the least. And I'm looking forward to the ones in London so we can actually see that. I think Europe is a little bit behind the curve in the sense that the regulations don't allow it, but I'm hoping that changes pretty quickly because I agree this is a game changer. And it does lead to another topic, I think it's a really well worth talking about is what we're not sure about. And I just the question I'm asking really is what happens if LLMs, large language models, get commoditized? So if they get commoditized, there could be a view in the world that actually they get commoditized, and actually what really happens is everything becomes open source, and then companies basically develop their own models, which means that all these data centers are not big centralized AI data centers the way we're building in the US, but actually they become grid edge. Now, this is very interesting because the European perspective would be we've actually got a really good electricity system, very good grid, and we've got spare capacity across a lot of it. So it could be Europe's chance to actually really jump on AI if it does go that decentralized route. Now, I'm not saying I'm not sure we're going to go that route, but it's an interesting question to do that. And I will say the point about the US. There's no doubt when you say we're going off grid, they're not going off grid. What they're doing is they're going off the electricity grid, right? Because what you're doing is you have to connect to the gas grid because you need to make sure these are 24/7. But the big question I'd like to ask both of you is, do you see LLMs commoditizing and then we move to that decentralized world where it is all about, if I'm a government, I'm going to go, I want to have my own AI system and I want to have it close to where I am. I don't want to have it sitting in another country, et cetera, et cetera. So it's an interesting question about the future of how AI goes.
I think it's a really interesting question. It also brings me to the question, will we see an AI data center boom in Europe in 2026? Will, Shill, thumbs up, thumbs down? Will, tell us more.
The Europeans probably know more than me, so I would take their responses over mine.
Energy costs too high. Energy costs are too damn high.
Energy costs don't matter. This is a really important thing about data. I mean, now this may change, right? If this bubble bursts, then energy costs start to matter. But in the context of the levelized cost of compute, energy is actually pretty small. Like it's all chips. It's all CapEx basically. So like you can bear a pretty high energy cost. The problem in Europe is more it takes forever. I mean, I heard A hyperscaler told me that they put in an interconnection request for a new data center in the London area, and they got a 2038 estimated interconnection timeline. So to me, I worry about time more than I worry about cost.
Sounds
Yeah,
familiar.
that's fair. I think maybe just to your point, just to answer your question, Jared, I think it's commoditization is less top of mind for me than nationalization. And I think maybe this is also where Europe falls down. We don't have a national lab that's kind of pumping on all cylinders in the same way that the US does. And I think for me, the kind of bigger trend in AI is at the moment, the reason there's so much attention and capital pouring towards it is the US has created a bogeyman in China. We're in a race to get to artificial superintelligence, which in theory would like mean you could take over the world. So we can't lose that race. It's a national security imperative. And so, yeah, all of my smart friends, kind of software engineers, they're chopping and changing between Claude, OpenAI, Gemini, Cursor, Windsurf every day. Like they just they used to use whatever's most efficient for them. But I think what's really important is what the US government thinks about the relationship of like how close we are to AGI, whether it's even possible to attain. If they do attain it, whether it kind of creates some security supremacy. And if they're in a race against China, like do they just nationalize these labs? And I think maybe that's why you're seeing underinvestment in Europe comparatively, because we don't have those national. A, we're not kind of aligned behind it, like against a single bogeyman in the same way that the US does. But B, we don't have a kind of national champion AI laboratory to kind of put our chips behind.
Yeah, there's another thing I would
Sorry, I'm
add
going
to.
to break in, Gerard, because as exciting as AI and data centers are, I think it's important that we touch on a few more other topics that at least the audience has been asking a lot of questions about. I'm very curious to get your views on. I think, Will, you led into Europe. We might not win on data centers. What can Europe still win on?
There's lots of really interesting stuff that Europe is incredible at, and you know, it kind of disheartens me to read that even the Mittelstand is now outsourcing some advanced manufacturing now to China, but there's still pockets of advanced manufacturing which are world leading. You know, thinking about like example I wrote down was membranes in the Netherlands. And membranes are super important for electrolysis, carbon removal, filtration. You know, a lot of really interesting technical stuff. We need to double down on those like centers of excellence.
I love it. Shill, looking from a US perspective, what do you think Europe excels at?
Vehicle electrification.
Hmm.
That's like the clear answer to me. I mean, in the US, we have started to go a little bit flat in terms of the EV penetration of new vehicle sales. I think it's going to bend back upward again, but it'll take some time. We've had a big policy change here. You know, the Trump administration removed the big tax credit that we had at the federal level. Meanwhile, Europe is still seeing EV penetration that expands, well beyond anything that we've seen here in the US. And some countries, obviously in the Nordics, like really, really high penetration. So that seems to me like an area. And then like all the business models that surround that as well, I think are more mature in Europe than they are in the US. So I
What are
would
we
think
talking
EVs.
about? Charging, or what are you thinking about?
Yeah, everything to do with charging and payments and clever models. Octopus has a sort of bundled fixed monthly EV plus retail electricity type of product, all these types of things that tie like homeowner experience with EVs and payments for EVs, all of that is more mature and interesting, I think, in Europe than it is in the US.
Yeah. I heard the Octopus model also allows the battery to deliver back to the grid, right? And that is one of the key components of it.
Yeah, that's starting. I mean, that's more of well, it's a combination of a market challenge and a technical challenge. Most electric vehicles don't allow you to do bidirectional charging yet. There's a small number of models, small but growing number of models that do, but those that do are pretty interesting. I mean, anecdotally, I drive a Kia EV9, which has a 100 kilowatt hour battery in it. I mean, I have like, what is that? 5 Tesla Powerwalls worth of power sitting in my garage right now, and I currently can't use it to power my home if I have an outage. And I live in Northern California where we have wildfires and outages, so it sure would be valuable for me.
Yeah, exactly. Gerard, how do you think where should Europe invest and what kind of technology niches can Europe win in?
Well, think where Europe leads in everything great. Okay, whether it's cable manufacturers, transformer manufacturers, software, and actually, I would say cutting edge technologies as well, because one thing that Europe has is it has an open power market. Okay. And the result of this is that ultimately you can generate electricity in Finland and sell it to someone in Spain. You've got the German power market, for example, would have 20 million trades a day, just to give you an idea. This is all automated. It's all AI. This is not human beings sitting there because you can't manage to move this electricity around and trade it without, without technology. So that's where Europe leads. And Europe needs to really build on that. I'm going back to the grid space. Sorry, not charging. So I'm sitting here at this conference here. Yeah, the global leader in vehicle to grid is called Mobility House, right? They've been doing it for many, many years, and whole big rollout in France with with Renault. And this is the type of thing that Europe is really, and the business models that come around that, because that's the interesting thing, is the business models that come around it. And these are next generation energy services businesses, technology enabled service platforms, all this type of stuff. If you take the case of renewables, what we need to be able to do is to make sure the grid is balanced. You need to be able to predict what the wind is going to be like the next day. Well, guess what? The leading weather prediction companies are in Europe, right? That's where Europe is really good, and Europe needs to really focus on those core areas rather than trying to chase and compete with the Chinese 5 years after they leave a particular area. That doesn't make sense to me, right?
Yeah, no, I think it's a very interesting point. Ember did some really interesting work there where of the value pie of the profits that you can make in renewable energy, the vast majority is in the software and the layer in between and not the hardware itself.
Yeah.
Gerard, a question from the audience. Love to hear your view. Will industrial electrification accelerate in 2026?
Oh, yeah, absolutely. Well, first, obviously, because of AI, it does straight away, right? Because AI is industry. It's the new 21st century industry, right? It does straight away. But the other trend you're definitely going to see, and I'm seeing this in projects that are at the beginning, what you're doing is you're building an AI data center. And because you've got excess heat, guess what you can do? You can actually, you can do other stuff around it. You can do food processing or something where they need that heat, and you can integrate it in. So I definitely see the AIification of our world allows us to actually reindustrialize in a different way than before. I'd be very, very positive on that. And I see a lot of projects starting with this. Now, don't get me wrong, they take a few years to come to fruition, but that's definitely very exciting. And the next thing I would say as well is that from a European perspective, we have to get away from gas. And this is it's the addiction to gas is not good for our economy, right? Whether it's the Russian gas, we all know that, or expensive LNG gas, that doesn't help us either. So the alternative is to electrify. And what you're going to see is more and more governments incentivize electrification for industry, right? So take the case of Germany. Heavy industry in Germany does not pay any grid charges. Okay, that's a clear incentive for them to electrify. They're saying, guys, electrify. That's what you do. So I can see more and more countries in Europe doing that, because that's the way forward from a geopolitical perspective, but also from an economic perspective and also from an environmental perspective.
Yeah, love that answer. Will, Shill, another question from the audience. Which technologies do you think will become investable for your strategy in 2026? Shill, you want to go first?
I mean, that's a very broad question. We have many technologies that
Which
are
ones are you
investable.
most excited about or keeping a closest eye on?
We're spending a lot of time in the physical AI world. So applications of this new wave of AI technology into physical industries, I'd say robotics being the sort of cutting edge of that, but there's a bunch of other things, AI for materials discovery as an example. Just, I think the first wave of AI that we've seen in this past few years has been around bits, not atoms for the most part, because you can train an LLM on the entire corpus of the internet and build an incredibly powerful model. And the next thing that is a harder problem, but there are a lot of smart folks working on it right now, is trying to build sufficient training data to be able to do things in the real world, in the physical world. And that's where it starts to matter in the categories that I spend time on and focus on. So lots of opportunities there. We've made a few investments already in robotics companies. I think there's a lot more to be done there.
Exciting.
Maybe one that's like I would like to see hit a turning point this year, having been uninvestable for a long time, is alternative proteins. So I'm a big believer that the way that we produce food is highly inefficient and also very challenging for a population that is still increasing, but critically, like the demographics of our global population are kind of getting wealthier, kind of getting an appetite for meat. I first invested in one of these companies back in 2017. So I know better than most that there's a lot of blood on the streets in this area, but it's now, you're just kind of seeing countries, regulators for the first time, it's coming to market. as a product, and B, the cost curve is just about kind of coming into a realm where it makes sense for kind of luxury high end pilots, right? So I would like to see this being a turning point for all proteins.
I like this hot take because, or I would call it a hot take, at least personally, I feel like renewable energy, because of solar, wind, batteries being so cheap, is driving most of the transition forward, except for in the food system. So, Gerard Scheel, what do you think? Will alt proteins go up or down in 2026?
I'm going to say I hope he's right. I'm hoping he's right.
I agree with that. They can't go down very much at this point, so there's
Yeah,
only one
exactly, Shane.
direction to go.
Good answer.
Gerard, one question I'd love your view on which technologies will become bankable in 2026 in the climate space?
Well, actually, the key technology that's going to become bankable is battery storage, right? Because if you think of it really, we've had batteries, but I'm going to say from a European perspective, we've had the UK market. You've also had batteries in the Texan market, but it's now becoming wide scale and it's becoming an asset class in itself, right? Where people are doing tolling arrangements, people are able to put debt in and around them. So I think that's really the big change is people are getting their heads around the business models and how it works. And I think this is very important because batteries are a critical enabler of future electricity system and also getting electricity fast to data centers and the like. So that's what I would say.
Yeah, love it. We got one interesting and not easy to answer question from the audience, which is, I think generally in this whole webinar, it's been very clear where there's a lot of secular drivers for climate tech. AI, data centers, independence are all pushing us forward. But many of us are still also investing in climate tech to have an impact. So in 2026, investing in which technology will have the biggest impact per euro for solving climate change? Now, Will, I know you had most time to think about it, so I'd love to hear your answer first.
I'm just going to build on Gerald's very first answer, which is cost of batteries have come down 90% since 2010, and the global build out of the kind of global capacity of battery storage increased 70% last year. So as the grid is becoming more unstable, as we have more renewable power, like to me, the most important thing that we can do is kind of build storage assets, and the time is now. So I'm going to go with batteries.
I love it.
I
Jill?
agree with that, and I just add also that, from a overall climate impact perspective, batteries get to do double duty because they decarbonize the grid and they can decarbonize transportation, so they have kind of an outsized impact.
Yeah. So batteries it is. Or Gerard, do you have a different view?
No. I agree with batteries, and I'm going to add one other thing that's very important about batteries is what they enable is grid resilience. And what I mean by that is we've had in Europe certainly recently we've had an attack on the Berlin grid. We've also seen climate shocks that have put down the grid in West Ireland and also Spain. And so you need to put batteries in there. That's what you do. You put batteries in there, you create resilience. I'm sorry, you build a data center today. They don't build a data center without backup power, right? So that's that. I would just add that element to storage as well. Is that it also about creating resilience in the system.
Yeah. Storage seems to be tying it all together. We're almost at the top of the hour. I'd love to hear for the audience, like if you would give them one message that you want them to take away from this webinar about investing in climate tech in 2026, what would it be? Will, do you want to go first?
Stay optimistic.
Gerard?
No, sorry. I go back to what I said earlier, which is that we're in a revolution. In a revolution, there's huge opportunities, but you also need to be really careful. That's what I would just say, investing in this space.
Yeah. Where should you be careful?
I think, I'm sorry, I'll be very careful in the fossil fuels area straight away. So some of the other areas, but I just, if I'm talking about in the carbon area in particular, I would say carbon sequestration. I'd say hydrogen. There's a whole pile of technologies, whether we like it or not, have been pushed by a fossil fuel lobby, and they're there to slow things down. And you have to be really careful of them. That's what I would say.
Jill, what's your key takeaway?
I think I would echo something Will said earlier, which is climate tech was never really a category. It was always just a theme amongst a bunch of different categories. And it's important to remember it that way because if sentiment is negative about climate tech, that also doesn't really mean anything. Actually, what is important is the categories that have the theme of climate tech and what's happening in each of them individually. So don't over index on the overall market sentiment on climate change, because that doesn't really have, or climate tech, I should say, that doesn't really have any direct impact on the actual markets.
I fully agree with you there. And I think that's the biggest thing that happened in 2025, where we shaped up the narrative. And summarizing this conversation, I think everything electrification is on, driven by AI and a few other things. And the rest of the space, we're hopeful when it comes to old proteins. And indeed, the molecules are a little bit more trickier in this market. Thank you all three so much for joining. Thank you, audience, for joining. And I wish you a great evening. Goodbye.
Bye,
Thanks a
everybody.
lot.
Thank you.
Bye.
Thanks a lot. See you.